Hello, everyone, and welcome to today's webinar on how to develop a plan for mitigating the risk of payment fraud. My name is Doug Weinrich, and I will be your moderator for today's webinar. The risk of payment fraud is on the rise, but many businesses don't have an enterprise strategy for recognizing, preventing, and responding to fraud risks. Individual stakeholders are often left with the task of addressing payment fraud. Today, you will learn how finance and procurement can work together to develop an effective plan for stopping fraudsters in their tracks. Our speaker today, Mark Brousseau, president of Brousseau and Associates, will show how COVID has increased the risk of payment fraud, detail the reasons that finance and procurement departments should lead the charge against fraud, provide strategies for gaining holistic visibility into fraud risks, and share a step-by-step plan for developing an anti-fraud strategy. Without further ado, I'd like to now hand things over to Mark. Welcome, Mark.
Hey, thank you so much, Doug, and thank you all for joining us today. I'm pleased today to be joined by Renee Blanchard, a product marketer for Corcentric. Renee has worked in software product development in the payments industry for more than 15 years, and she's experienced in operations, product development, and management, and business and technology solutions. She resides in Omaha, Nebraska, and she's eager to share what she's hearing in the market as it pertains to payment fraud with all of you. Welcome aboard, Renee.
Thank you. It's good to be here.
So chances are your organization is thinking more about payments fraud these days. The operational disruption caused by the pandemic, well, it's really changed the way our AP departments operate, and it's created new vulnerabilities. Today, we're going to show you strategies for mitigating those risks of fraud. We'll talk about how it is that organizations are more at risk as a result of the changes in our operations. We'll lay out an approach to developing an enterprise-wide strategy for preventing fraud. And we'll talk about the role that automation can play in that strategy. We'll also provide you with an opportunity to ask your questions, and we encourage you to submit those questions throughout the webinar. Go ahead, use the chat tool on your screen, and we'll answer them at the conclusion of the webinar. Before we get started, I'm going to tell you a little bit about the sponsor of today's webinar, Corcentric. Corcentric is a global provider of market-leading source-to-pay, order-to-cash, and fleet solutions. Their customers include many prominent brands among the Fortune 1000. And what Corcentric does for these organizations? Well, it delivers software, advisory services, and payments technology that helps them transform the way their accounts payable, procurement, and finance departments operate. And that's what Corcentric thinks makes it different. Its mix of payments, advisory services, and software. I encourage you to learn more about Corcentric by visiting them online at corcentric.com. So if your organization is thinking more about the risk of payment fraud these days, well, you're not alone. Most accounts payable leaders believe that their risk of payment fraud has increased since the start of the pandemic. In fact, 1 in 5 AP leaders believe that their organization is at significantly higher risk of fraud now compared to 16 months ago. Renee, what are you hearing from customers and prospects? Are they feeling more anxious about their risk of fraud these days?
Yeah, they are. We've seen an increase in the attempts to make changes to bank accounts to our existing suppliers in our network. And so if we're seeing this increase, then it's likely that other companies are seeing it too. So things can go wrong if a company doesn't have the necessary mitigations in place.
In fact, the risk of fraud has now zoomed up the top of the concerns that AP leaders have about the way they're doing things these days, topping hot button issues such as the timeliness of payers and the ability to respond to inquiries from suppliers. What's going on here? Well, the shift to remote working completely upended established policies and procedures for how it is that invoices get approved and payments get made. In many cases, organizations have had trouble adapting paper-based and semi-automated processes to this new remote work environment. And so what's happened is that a lot of businesses have had to make hard choices between checks and balances and simply getting their suppliers paid. In fact, Interpol, the FBI, the IRS, states attorneys generals, a who's who of people you never want knocking at your front door. They're all sounding the alarm. They're anticipating a spike in fraud as a result of the way that AP departments are doing things these days. We've heard cases of AP leaders having to drive paper checks around town to get signatures, dropping them on someone's doorstep to ensure social distancing. We've heard of organizations sending trusted employees home with check stock and check printers. We also hear of many, many AP departments that are relying on risky emails for routing invoices for approval and for gaining the approval of payments. Put it all together, and the risk of payment fraud is at an all-time high. That's not to say that things were much better before the pandemic. In fact, 74% of organizations say that they were the target of fraud attacks in 2020. And 65% of them believe that the pandemic is contributing to their risk of fraud. This is something that AP leaders and senior managers alike ought to be concerned about. So what kind of fraud are we talking about here? Well, it really falls into three key categories. The first type of fraud that many organizations are experiencing is business email compromise attacks, or BEC attacks. In this case, scammers either gain access to your supplier's email, or they send spoof emails, or even create web domains appearing to mimic your supplier's actual business. And what happens is your AP department receives an email that appears to be from a supplier, and the email invariably instructs staff to make a last-minute bank change before a payment is sent. So these hacked emails come from the phishing attempts that we're constantly seeing out there, but in many cases, the goal here is to trick AP into making a payment or a bank change to someone who they believe is their legitimate supplier. And in many cases, they're able to get away with this because either our networks can't identify an email that's from out of the domain, or in some cases, those phishing attempts we constantly see actually worked. Fraudster was able to obtain a supplier's username and password information, and then they were able to reconfirm login credentials. BEC attacks are on the rise, and they are insidious. Even small businesses aren't immune from receiving more BEC attacks. But that's not the only type of payment fraud we need to be concerned about. We also have to worry about account takeovers. If a scammer can obtain your login credentials through, say, a phishing attack or some other method, then they have the ability to log into your AP system, your bank accounts, your vendor systems, even your emails, so that they're able to initiate and approve bogus payments. They're taking over your systems. Some cases, they're changing your bank information to misdirect legitimate payments, or they're even stealing vendor banking information and other sensitive data. The third type of fraud that's on the rise is imposter suppliers. What's going on here? Well, in these cases, new suppliers that you're in the process of onboarding are being impersonated by a crook seeking to intercept their first payments. They're using emails and phone numbers and names that are similar to your supplier's real information so that they can trick you. They're impersonating a legitimate supplier. And if you have suppliers who are bidding on public contracts, now these guys are a particular risk because the fraudsters know exactly who to impersonate to obtain a payment in the new relationship. Renee, these all sound like daunting cases. Is there anything organizations can do to mitigate the risk of fraud?
Yeah, companies need a multi-layered approach for their controls for payment fraud. So if you just have one control, that won't stop the fraudulent activity. You need to include many types of control to limit the exposure. The more controls you have in place, your chances for fraud decrease exponentially.
No matter the type of fraud, when you put it all together, it's taking a big toll on our businesses. It's costing us a lot of money. And it really comes down to three key ways that fraud is costing our businesses. Of course, the first way is the most obvious: fraud losses, funds stolen from our accounts. Perhaps it's stolen goods or services, or maybe it's even chargeback costs. The second high cost of fraud is the tools and the headcount. It takes a lot of time and money to detect and to mitigate payment fraud. We also have to build out internal systems and tools to help prevent fraud. And we're going to have to put a lot of human resources to fixing all of the problems. And what's more, you're also going to have the cost and the potential impact on your partners. In many cases, suppliers are unwilling or reluctant to do business with companies that have been the victim of repeated fraud. In some cases, we're impacting our suppliers with strict controls. We're making it more onerous for them to do business with us because of the way we go about mitigating fraud. And there's also cases of false positives where our technology is incorrectly detecting anomalous transactions, and that's holding up payments or otherwise impacting our suppliers. Put it all together, and the total cost of fraud on businesses is extremely high. How high? Well, many organizations report that they lose at least 0.5% of their total revenues to fraud each year. Imagine that at a time when the economy is in a ditch and we're looking for any way to free up cash and to reduce our costs. Fraud is taking a big toll on our businesses. And one of the biggest ways that it's happening is through those BEC attacks that I talked about earlier. 63% of organizations say that BEC attacks are the primary source of fraud attacks in their organization. In fact, 76% of businesses experienced a BEC fraud in 2020, and 34% of them reported a financial loss as a result of BEC or some other email scam. And this is really scary when it comes to payments to suppliers. For the longest time, folks, we thought that fraud was synonymous with paper checks, and rightfully so. For the longest time, paper checks resulted in 10 times as many fraud losses as electronic payments fraud. But what's happened is the fraudsters have wised up to the migration from paper checks to electronic alternatives such as ACH. And so what they're doing is they're finding ways to get into the system, to intercept those electronic communications between trading partners and to dupe us into sending payments to them instead of to our legitimate suppliers. This is a big problem for organizations. On one hand, we want to move to electronic payments, but on the other hand, we need to make sure that it's as safe and secure as possible. And that's why an enterprise fraud mitigation program is so important. Another reason it's important to build out an enterprise program is that fraud attempts are increasing in velocity. Look at this data. The Institute of Finance and Management recently asked its members whether they experienced a single or multiple attempted case of fraud in their organization. 40% of IOFM members said their organization was victim of multiple fraud attempts in 2020. Another 30% said it was one attempt. What's really startling about this data is that among the 40% who experienced multiple attacks, many of them received 6 or more attacks. Fraudsters are unrelenting. And one of the things they're really locking in on is the fact that businesses are inviting attacks because we're relying on emails to onboard suppliers and route invoices for approval. I know I know when we went to remote working at the start of the pandemic, it made perfect sense to route invoices for approval via email. We couldn't deal with the paper in our office. The problem is that over time, the issues with emails are starting to show through. And today, I would argue that remote working has increased the risk of fraud because of that reliance on email. Think about it. Emails aren't secure. They don't provide segregation of duties. They don't enforce chain of custody assurance. They don't track the actions taken on an invoice. They don't provide you with visibility into where an invoice stands in the process. They don't provide ready access to audit information. They also can't stop somebody from deleting an invoice ahead of schedule. We all know the person who likes to clean out their email box on Friday afternoon so they can start fresh on Monday morning. The problem is we need to keep track of all those invoices, put it all together, and you can see how easy it is for fraudsters to infiltrate our firewalls using emails. Businesses aren't sitting back and letting this all happen. Of course not. They're taking measures to mitigate their risks. And they're really doing three key things. First, they're starting to standardize their processes across payment modalities. I know most businesses today are probably using positive pay for their check payments, right? You submit a list of legitimate check payments to your bank, and as those checks clear, they bang them up against this list to make sure they match. And if not, that check is held to make sure it's legitimate or not. Well, now we have the ability to use positive pay for ACH as well, and more businesses are starting to avail themselves of the technology. Businesses are also looking for ways to develop controls for remote working. They recognize those risks with email and other things we're doing. So recognizing that there's no telling when we're going back to the office in AP or whether we're going back at all, they're looking for ways to get better control over what happens in a remote work environment. And finally, businesses are starting to reconcile their payments daily. It wasn't uncommon before the pandemic to find businesses that would reconcile payments weekly or maybe even on a monthly basis. The problem is that when you don't reconcile payments more frequently, now you're going to have more opportunities for things to go unchecked. And fraudsters are smart. Once they get away with one fraudulent payment, they're undoubtedly going to come back for more. And so if you're waiting a week or longer to reconcile your payments, the chances are you're going to invite multiple attacks. So Renee, how is it that Corcentric's approach can help mitigate fraud for its customers?
Yeah, so in addition to the steps you mentioned here, we have a security board that meets every quarter, and we talk about the different types of fraudulent attempts. We review the processes that we have in place now to make sure that they're working, and then to see what other types, any changes that we need to do in our existing processes, or if we need to put any new processes in place to account for the new types of fraud attempts that we saw. And that are continuing to change over time.
And that is a key approach because it's not enough to take a piecemeal approach to mitigating the risk of fraud. Those will only go so far. What organizations need to do to really take the upper hand against fraudsters is to make fraud mitigation a way of life across your enterprise. It all starts with making sure that your staff commits to due diligence and to training. Many of us have already taken this step. Then you want to have a trust but verify approach. So you want to make sure that you've got safeguards built in to investigate any anomalous transactions or changes in supplier information that might not be quite in the ordinary. You also want to make sure that you have ways to collaborate with your suppliers and your stakeholders across the organization to mitigate potential risks. If one thing we've learned over the past year and a half is that it's key to have strong supplier relationships, and this goes to fraud mitigation as well. You also want to make sure you have ongoing educational opportunities so you can keep your staff abreast of all those new or emerging fraudulent ways that crooks try to take money from us. This is what Renee was alluding to. You also want to make sure that you have consistent, enforceable validation procedures in place. And you want to make sure that those procedures are automated. In many organizations, we rely on our knowledge workers, our trusted employees, to spot anomalies. And that makes perfect sense, right? They've seen it all. The problem is they can't catch it all. They take time off, they have a bad day, they might not see a particular invoice, and so there's things that slip through the cracks. And even for organizations that try to manually review every transaction, as if that was even possible, you're going to have cases where something will slip through the cracks. When you're building out an enterprise-wide fraud mitigation program, you want to make sure you have alignment of all of your key stakeholders across the organization. You've got to define a clear pathway from this disparate thinking or piecemeal thinking that we have in most of our organizations toward achieving a shared philosophy for fraud detection. So how do you do this? Well, you've got to involve all of your stakeholders and balance their sometimes competing requirements to define a fraud detection strategy that's going to be based in reducing the total cost of fraud and aligned with your broader business objectives. What you want to do is you want to get away from the parochial approach that so many businesses are stuck in. In a lot of cases, we have myriad requirements for different teams, and they don't align with our broader organizational goals. What you want is everyone singing from the same song sheet, if you will. And to do that, there's really 5 key steps that you've got to follow. The first is you want to encourage all your stakeholders to define their challenges and their requirements when it comes to fraud detection. And this is going to change by stakeholder, and it should. The group needs to collectively recognize and understand all of these different perspectives. That's going to be the baseline for enforcing change. Next, you want to move the focus from internal stakeholders to your suppliers. You want to consider the supplier journey and how a fraud detection strategy is going to impact them from end to end. Next, you want to have an agreed upon framework that you build as a team. You want to develop this framework to quantify the different ways that fraud impacts your organization. The framework needs to address all of those different types of frauds and all of the different vulnerabilities that you have in your organization. This is where many organizations really start to fall down. The next step, you want to have a shared philosophy for how it is your enterprise is going to stop fraudsters from ripping you off within the context of that framework I just talked about and your organizational goals. This philosophy is going to have an approach that you all agree on to fraud detection. Now, you want to make sure that it balances your stakeholder needs as well as your needs for business growth and security. So don't get this wrong. You don't want to create such rigid controls that your business isn't able to do business. You want to make sure it's rooted in reality. And finally, you want to make sure that your strategy is proactive, not reactive. What you want to do is you want to define a path forward to ensure that the strategy evolves with your changing organizational needs, as well as all those emerging fraudulent attempts that Renee was talking about. If you do this, if you do this type of an enterprise plan, it's going to create a foundation that can grow with your business and adapt to the ways that fraud risks change. You're now going to have tools to remove manual tasks. You're going to have extensibility for business growth. You'll have transparency, and you're going to be able to evolve a plan over time. This is how it's so different than many organizations. So the question, Renee, is if we do all of this, how can we be sure that it's actually working?
Well, one thing that we've done is we've added third-party social engineering audits to our internal controls. So we've had success with these because it allows us to validate that our processes are working. It shows us where there may be shortcomings in our processes, and it gives us a chance for further training of our employees. Third parties can also provide us insight to any new types of fraud attempts that we may not have encountered or found during our research.
One of the key elements of that enterprise fraud mitigation plan is to automate as much as you can. Fraudsters are using high tech. We need to use it as well. And one of the most powerful tools you should have in your arsenal is the ability to automatically validate information that comes through your procurement and AP department. And this validation should be done continuously throughout the process. You want to validate the relationship between you and your supplier. You want to validate supplier information against federal and international lists to make sure that the supplier is who they say they are and a supplier you ought to be doing business with. And you also want to validate the payment instructions that you're provided and that change over time. One of the biggest tools that suppliers have, or fraudsters have, is that supplier payment information does change over time. And they're counting on us being so busy in our procurement and AP departments that we don't have time to validate that it's actually the legitimate supplier who's requested those changes. So what's the message we want to leave you with today? Well, it's this. Today, your risk of fraud to your organization is higher than ever. But the problem is that those risks are increasing. The move to remote working and the new tools at the disposal of fraudsters has made it easier for them to infiltrate our organizations. And we have created vulnerabilities because of the piecemeal approach we've taken to thwarting those risks. So there's a few best practices that you can implement today. First, you never want to share the name of a system administrator with a supplier. This is exactly what they need to start on their way to an account takeover. Second, you want to implement validation procedures for suppliers who call or email. You want to make sure that they're enforced, that they're consistent, and wherever possible, that they're automated. Third, you want to make sure you confirm all business relationships that your procurement and AP department has. Here again, you want to make sure you're gathering as much data as possible and you're validating it in every single instance. And finally, you want to automate the validation of every request to update contact information or banking details on a supplier. This will help you stop the tide of BEC attacks. That's what's on our mind. Now let's find out what's on your mind. Doug, I think it's time for some questions from the audience.
That is correct. We did have a few come in during the presentation. The first one being, what are the most common mistakes companies make when planning to address payment fraud?
Yeah, not having enough validation controls, having inadequate training for the individuals performing the fraud prevention tasks. Another one is not having the proper segregation of duties, and definitely no callbacks for attempted changes to sensitive information, like Mark was mentioning in the slide before.
You know,
Great.
Doug, I'd add that one of the biggest problems we have in AP overall is a lack of visibility. And when we look at the vulnerabilities of payment fraud, one of the biggest challenges is a lack of visibility. We just don't have visibility into the supplier data, to supplier relationships, and to where things stand in the process. And so if only we could digitize these processes and get access to that information, now we'll be able to have better control and tracking and be able to stop the fraudsters.
Well said. Second question. Any suggestions on the best way to break down the various silos involved in the payment process where fraud can occur?
Well, it's important that even though there is silos, we need to make sure that they overlap each other in regards to the data where the controls are performed. Make sure that each department has training, and then we need to make sure that each department is clear on what they're doing and how it affects the other departments.
Yeah, and if you build that enterprise fraud mitigation plan, now you'll have those common goals and policies that everybody can work toward and work against.
Perfect. And we have time for one last question here. Who tends to be the champion to drive fraud programs within a company? Would you say head of accounts payable, CFO, or another position?
Well, typically, we would see it in accounts payable, so that's a great champion. But we're also seeing that the information security department is also becoming a part of the effort because the data impacts the entire organization.
Great. All right. Well, thank you to our presenters and thank you to all the attendees, and thank you for submitting your questions. If you have any additional questions, please submit them to the emails on the screen and we will answer them individually. Also, like mentioned at the start of the presentation, we will forward everyone recordings from the webinar today. And as always, thank you for joining us. We truly appreciate you spending time with us today.